Okay, I'm going to try the impossible trade here because it'd be damn near impossible for them to fill this trade. So I'm going to wait. Sit and wait and see what happens. Let's see if they'll fill this trade. Okay, yeah, it's down to 22. Yeah, so 45 cent credit. Let's try. See if we'll get filled for that December. Basically trying to roll these strikes out to December, get more time on the November trade, an EEM, seeing if I can roll these out and get some more credit for it. See if they'll do that. In the meantime, while we got that order in, SPX, pretty much flat. VIX, pretty much flat. Cost of money goes up just a tiny, or goes down a little bit. Okay, we did get filled in ARK. That was that butterfly. The only thing I have so far that's kind of interesting is SCMI is going a ways against us. So let's see if we're 12 deltas in that. So we're not in the 15 delta fear house yet, but let's just see. Well, I want to be risky. See about changing those deltas. Yeah, we're going to bring this up to the 30 strike. SCMI, which is a gap down, is just getting destroyed. So if we go up to 30, and we can bring it to that 30 strike. Because it literally is getting demolished. So roll that to the 30. Let's see if we're going to get any credit for that. Oops. We want to roll that upper strike down. We had a 1535. And, this thing's been getting destroyed. So we're going to roll this. 30, we're getting 35 cents credit. We're at the 21 delta. Yeah. $0.36 credit. Okay. I ain't mad. Okay, we'll try for the 36 cents credit. Where's EEM? We got, okay, so the 45, we're working that 45 order. Try to move that. Tilray is that diagonal trade. VIX, we're sitting until December. That doesn't matter. X was the other one. We're only 6 deltas, so in X, and that's a volatility. We're only getting hurt because of volatility on that. Because after markets close in X, it doesn't hurt as much. Although we are getting kind of, it is falling toward our short strike again. So we could actually move this. Or can we? Well, we'll see if they populate with some volume here. Let's see if X, if we're at the 22 delta, so I'm not going to really freak, even though it's going down a little bit on us. That's not something I like to see. Let's go to the curve. I mean, we are 6 deltas, so it's not like the end of the world. But it is definitely, something, a cause of alarm. We could definitely bring this down a little bit and get some more premium. Yeah, the volatility crush is just, or the volatility expansion is what's hurting us in that trade. See if we could get this EEM trade. Okay, I'll even come up with a little less credit and see if they'll fill it. See if they'll roll those strikes for me. I don't know if there's any volume there yet on those strikes. And EEM. We're trying to roll it to December. I don't even know if there's any volume in there yet. Yeah, it doesn't look like there's any volume. So, yeah, of course, there's nobody trading it right yet. So we'll wait on that. So we got basically their markets are completely flat. And position-wise, SMCI, I could get a little scared of that. That's why I'm rolling it down. Okay, so you're asking 33. Okay, let's drop it a little bit. Let's go 34. Yeah, down 8%. Damn. 9%. Supermicro looks like it is over and done. So we'll see if we could get some credit. Not getting a lot, but let's see if we can get some. All right. I'm going to get greedy. Okay. So we'll see if it gets filled. We do have some volume on there. So we'll see if they fill the trade. In order for that to happen, SCMI would have to go up. And that doesn't look kind of likely. This thing is just losing it. So we'll see. We'll see on SCMI. That's a December strike, so we do have time. It was like 39 days. 36 days. So we do have a little time. Not the best, but we do have time for that. I really wanted that EEM trade. We've already moved X around. It's only 8 deltas, so I'm not going to freak. Tilray, that's the real cheap trade. That's the lotto ticket, so I don't really care about that. That's a lotto ticket trade. TLT, don't care about that because TLT is another December trade. So we'll see this SCMI. Fortunately, we're paying for it with the theta. The only thing is we're losing more on our delta gamma as this thing gets crushed, or this SCMI gets crushed. We're losing on delta gamma, but we're making it back with the theta just a little bit. Not like what we should. Anyways, so markets are flat. Inventory. Let's check the rest of the inventory. The stuff that did not get filled. See if we have another crack at it today. Okay, so the SCMIs, EEM, X, GDX, that was the other one that didn't get filled. GDX and KRE. GDX, Strangle, now it's down at 91 credit. That would have been great to get it filled yesterday, but it never got filled. But just in case gold decides to go up and give us more volatility, I'll put it in a higher price. We'd be up $10. We'd be up 10% today. If the trade ever got filled, we would have had 10% today on that. But I'm going for 50%. But KRE never got filled. And we were going in for like 60, 55. Yeah, we would have made about 10% on that today. But I'm going for 50%. So so that's not like I'm not doing these for like 10, 15% trades. I'm going for 50% of the credit, as at least. I might go 30% of the credit if it's a condor. But for strangles, I always go for like 50% of the credit, at least. All right, that's it for inventory. That's it for markets. Let's go to new trades. Hotep there, Brother Will. So we'll go and look at new trades. Hold on for 1 sec. Okay. All right. So we got that there. Hotep there, Brother Will. So we got that out of the way. Looking for new trades. Start with what can we sell? Okay. Uber. Not a lot of contracts. No IVRs, nothing on Uber. That's buy, not sell. So X is going up in volatility. That's the one that I've been having trouble with, moving it around because X continues to go down and down and down. Is X going down or going? No, X is going down. That's the one I keep having to move. Yeah, because volatility is just keeps going on US still. Volatility just keeps moving against me. But anyways, it is what it is. Let's look for some new trades. Okay, Boyle, MicroStrategy. That's the one that I said I would never do. But look at that. I mean, it's got option contracts. Who got filled? Okay, GDX. We got the strangle in there. So GDX, let's just double check. GDX. Usually when it gets filled, it means the market. Okay, and I got filled for $1. I mean, metals hasn't been terrible, but I've been getting beat up. I like going back to the well, just getting beat up for no reason on metals. Okay, GDX. What we got going? We're pretty much okay. We're 6 deltas. Okay. I got him with the 6 delta. Okay. Yeah, because it went down against me 20 cents. Oh well. Okay, 86% chance, 65 probability of at least making that. Buying power, clear that. So it's still on the hill, so I'm not gonna cry. You know, I'm not gonna cry. Let's see what we got in terms of our GDX. Okay, we're 7 deltas. All right. We're making $2 a day. Volatility, that's not fun. With your volatility, if it goes up and gamma increases, then we'll lose. But I'm not gonna cry. I'll cry I'll cry if I can't get filled in SCMI for 34 cents before I cry in GDX. Because I don't mind, and volatility is going against me in SCMI because it's just dropping like a rock. Down 11%. Yeah, it's dropping like a rock. So, you know what I'm going to do is see if I can get some more credit. Since it's dropping like a rock, let's see if we move this from the 30 down to 18. That thing can move $6. Let's say 24, 25. They're saying it could move $6. ATR says it'll move around $6, $7. So if I do this, cancel that order and move it down to where I can get more strikes. See if I can move it to the 28 strike instead of the 30. We'll go to the 28 because this thing is dropping like a rock. and we're going to try to capture some credit. Yeah, so we'll go to the 28 strike. Replace that SCMI, the one we're getting torn out the frame with. Place that. Move the 30. Go to 28. We should get filled because there's a gangload of see. Okay, you know what we'll do? Instead of doing that, cancel clear. I was going to try to just roll it. Just cancel this. Take the 35, move it to the 28. Roll strikes down to the 28. That's 24 deltas. The only reason I'm moving it down there is I've got a lot more. I got 1,000 contracts. So a lot of folks think this could get to $28. And that should improve our deltas. We'd be 10 deltas instead of where we're at right now at 14 deltas. So we're capturing some of them deltas back. And volatility is also going against us. So yeah, so I mean, that's a 48% chance that thing will get touched. This brings it back. There's only 11 contracts here for 37. Okay, buying power, $1 credit. I want to increase that. Let's see if that'll get filled for 49 cents. They're asking 47. Okay. Let's see if we could get it for 48 cents. We'll only get it if SCMI goes back up. Right now, it's just getting torn up. 13%. Yeah. So it's definitely going against us. 54% chance that this thing will get touched. That's how, I mean, this thing is, there's 2,000 contracts down there, so somebody believes that this thing should fall. And it's down $2. 13, and again, this thing can move $6. So SCMI is definitely, I think we were up too. A nice little, we were up. What did I do for credit on that? We weren't up the full 50%. No, we were only up about 5% on that before it took a turn for the worse. We were up 5%. So it is what it is. Anyways, if that, about 10%, almost 10%. We were up. But again, I want to get 50 out of these. So if we could get that 48 cents, I'll get it, and I won't cry. X, 9 deltas. It's going against us, but I'm not gonna cry. Let's go with X. See what X is looking like, because I want to get some credit. 9 deltas. I mean, I could drop it a little bit. It's just this thing could get volatile. So I got a 48 strike on that. I could still drop it. Let's see if we're going to get paid to drop it, to bring the strikes. We get paid for that. And if so, how much? Okay, $3 debit. If we were to bring these down, see what, clear. Let's do this again. To get some credit on this. Roll strike down. Okay, so if we rolled it 1 strike down, we get 29 cents of credit. Where's our deltas? Because, we're at 10 deltas, so, I don't mind evening up the deltas a little bit, but there's no volume there. And that's a 48% chance that market will hit you. We're already at a 40% chance. To get 29 more cents on this trade, to take that chance. This thing, they're saying it'll move about $9. ATR is saying, okay, SCMI got filled good. We got some credit back on that. ATR says this thing will move. This thing can move $2 a day, about $2.60 a day. It's saying so. We got some credit on SCMI, which means the market is going back up a little bit on it. Look at the curve. We're still definitely off the mountain, so it's still a little scary. We're off the mountain. If we go to SCMI, let's go to analysis. Yeah. Okay, SCMI. I mean, it could fall. This is a volatility. It's destroying. That's why it's down so much, because of volatility. But my delta, in terms of deltas, we're a little bit closer to the mountain, because if we look at our deltas, we're only 4 deltas long, where we were like 14 or something ridiculous. So we tightened up our deltas a little bit, got a little bit of that credit back. But right now, volatility is definitely, hurting us. That's why you're seeing what it is. Okay, Tilray was that lotto ticket. X, 8 deltas. I'm not going to freak, so I'm not going to do that. XSP is a dead trade. VIX, we're going to sit in the wheelhouse of VIX for a while, because that doesn't expire for 30 some days, and that trade is what it is. That was a Trump trade, and it didn't work out. KRE, we're sitting on. EEM is the only one that okay, good. Mid credit 45. Let's get 45 cents if that's what they want to give. Okay, good. So EEM, we did that one. EEM, we got another 45 cents on that. So the trade price is 32 cents on that, of how much it cost us. We started out with 77 cents. That trade cost us 77 cents. Now it only costs 32 cents. So that's good. We took some of the price off of that. So, and that one is literally just a regular calendar. The December, we sold we're selling the December 6th, buying the December 20th. And all we want to do is just, with this one, the way this is, we're a little long in terms, because that means market's been going down. When it goes down, you're a little more long. You're getting paid. Well, you're losing, at least as of now, 16 cents a day, but that I'm not going to worry about that. The more it goes down, you make $2. Gamma, it moves, it will move quite a bit, so that gamma might mess us too fast. But this is just getting credit and trying to take advantage. The theta should come up a little bit. The only reason we went down is because we're out to December, because we rolled it from Friday's trade to December. So, because Friday's trade is basically done, and I'm just rolling it to get more credit on this. It's a calendar. If we take a look at that, let's go take a look at, let's see if we can find what the curve looks like on that. Let's get rid of the expiration curve, deal curve, expiration curve. So let's see what that looks like. So I mean, so I'm not, it's going to be kind of hard to see, because this is it's calendarized. But looking at this, it would only cost us, right now the market's so we'd be making, if we closed it right now, we'd make about $17 overall if we close the trade right now. So that's if it is what it is. ARK, we have that butterfly. ARK is going down. Our short strikes are at 53. It's a 54.93, so I'm not paranoid yet. ARK was the other butterfly. We had that in Riot, and Riot never got filled, but ARK got filled. KRE, Iron Condor. Okay, I'm going to leave it up there with the credit. SCMI, Delta Neutral. I'm not going to freak. Or not Delta Neutral. We knocked off some of those deltas, because it was just, again, SCMI is collapsing. It's crashing. Tilray, butterfly trade. Tilray was the lotto ticket, free trade. TLT is the butterfly free trade. VIX, I don't care until December, and then I'll just take it off. It's already, VIX is down, so I'm not going to do anything. It's defined risk. X, we are 8 deltas long, which means the market's going against us, but it's only 8 deltas, not 15 deltas. If there were more than 8 deltas, I'd be scared, but I don't care. And XSP is dead. That's a dead trade. That's the Trump trade. MicroStrategies. Is there any volume in MicroStrategies? Especially around, since December's so close, I'm going to go out December 27th. No volume. King is absent. Let's go to January. 64 days out. Is there anything in MicroStrategies? Nothing. Let's look at the 16 deltas. Nothing. There's nothing being traded. No volume. I mean, barely. At 10 deltas, let's see. Say at the expected move, the 10 deltas, you might have a little bit, but there's only 13 contracts. So they go into a party and there's only 13 people showing up in a hall that holds 100,000. So yeah, we got this big gala that holds 100,000 and only 13 people show. That's why volume is important. So MicroStrategies, I don't see that. Now, if we're talking about the people that are outside, open interest, there's all kinds of folks holding on to contracts. But I don't think anyone's going to be getting rid of those contracts any soon. But in terms of volume, there's nothing being traded. Nobody's giving you, saying, oh, yeah, here, I'll sell it to you. Let's see on the 16 delta. Nothing over there. Yeah. Let's see, nothing around. Let's see. So the 22 deltas. If we went out to the 21 delta, somebody believes that this stock could go to $720. Somebody believes that in January, MicroStrategies is going to get up there to $720. There's contracts traded there, unless they sold those and trying to be safe. Let's go to 21 deltas to the downside. Go to 20 deltas. Okay, so $42 at a 25 gram. So that's 4,000 at a 25. Okay, I'm not mad. Let's condorize this. See if we could condorize it. Nope, not going to be able to condorize it. No volume. No, there's nothing there. 282 at a 718. If volume shows up, I might look at this. I might take a second look. See our mountain. What does the mountain look like? Let's see if we could see what the mountain looks like. Okay. I guess because, there we go. Just seeing how much you would lose if it shot up there tomorrow. We'd be down about, if it shot to the upside tomorrow, you'd be down about $17. Shot to the downside tomorrow, you'd be down about, let's see, or theoretically, saying about $25 if it just shot to one side or the other. So, interesting trade. I may take a look at it later. Nikola, I never traded that. That's the anti-Tesla trade. That would be something I would buy volatility. Look how that 16% volatility went down. MicroStrategies just exploded in volatility. So did Coin. And could it be because Coin? Let's see what's going on with Coin. It's only down a little. Well, it filled the gap, so it could go back up. That's a Trump trade. That is definitely Trump. Coin. In other words, Bitcoin. Let's see what the futures, the speculation of Bitcoin is. Yeah, it's barely down. I mean, if you look at what Bitcoin's been doing, it's just barely down. A little red candle. So the Trump trade is still in effect. The Trump hype trade is still out there. Looks like Delta Airlines wants to come to the party for selling volatility. And I'll see about buying volatility. I really want to try a better way to buy volatility. I want to do those like EEM, like when I got the diagonal. I want to do that and I may do that again on XSP. That's just such a hard one to, it's all about timing and how fast it moves. Delta looks like it wants to sell volatility. Let's see what goes on. Look at that 16 Delta. Going out to January, got 18 deltas here with only 5 contracts, and we got 15 deltas here. So we are a little bit long deltas, which means our short strikes are closer. So if we went to, well, then we'd be long deltas. If we went to the 12 delta, still yet, okay, so if we go to the 15, 18 delta, you're a little long deltas, which I'm not going to freak. 196 is 6, so it's barely a third. 89% chance you're going to get 50% on that. 75% chance of profit. If I were to get in this trade, one, I will increase the price. We got 196 to 206. I'll go 202. No, we'll go, see, market's going, just giving us a little bit more room. So I'll go to 206 because we're now at 199 to 12 credit. We'll go to 207. If I were to take this trade, let's take a look at our mountain. Let's see what we got. Again, if it explodes to the upside, you stand a risk. You'll be down. If it exploded up there tomorrow, theoretically, you'd be down about 365. Exploded to the bottom. I think I did that wrong in MicroStrategy because I was looking at the wrong number. If it explodes to the downside, you'd be down 143. This thing has the ability, they're saying the expected move of this thing can move. They're saying it can move $7 between now. They're saying it'll move a total of $7 between now and January. But the heat factor, this thing can easily move $3.60 a day. It's already $1.40 right now. So, and again, taking the last 21 days, I think I've got like 21 and 44 days. Between 21 and 44 days, it's got an average of $3.60 moves that this thing can move per day. So I'm not gonna, I'm gonna put that in there. But if I were to do this trade, 57,580, what would happen if I went to the 55? Okay, again, you're barely getting that third. If you go to 60, you're definitely getting a third of that, except for your deltas. You're already 11 deltas. We went down here, we're more delta neutral, but we're not getting paid for the risk. So if I did that from 165 to 185, I want to be right in the center. Since this thing is already moving around, make the market come to me, and we'll do that. Okay, so we got that going to sell Delta Airlines, if it'll ever get filled, because I'm making that market come to me. It's not like I really want that trade. It's not like, oh, I got to get in. Man, SCMI, man, the volatility is just it's just going through the roof. That's what's hurting us in our pricing. Riot, that was the other trade that never got filled. That was the Cathie Wood trade. If you see, Riot is also coming down because it's a Bitcoin trade. We already got 1 Bitcoin. I don't need 10. We got metals, marijuana, MSOS. I saw it, MSOS. Marijuana, that's a penny stock, $5. That's nothing. Again, that's the Trump trade. Anti marijuana. Republicans come in, they'll probably want to go ahead and get rid of all the marijuana laws, except the states that they're making money. The red states are making money. It's all good. This thing can move $1 a day between the average between 22 days and 44 days, or 21 and 44 days. This, again, gaps like to be filled. This might go fill up to the upside. Let's see if there's any volume. Going into January, nothing. Oh, yeah, they got a little bit. 32 deltas, but we want to go down to the 16. 16 deltas. Remember, statistics say that 68% chance that that's not going to mess you up. This is the closest we get is a $4 strike. So we're definitely delta long. We're long a gangload of deltas because, this thing is damn near a penny stock. So, of course, I mean, oops, wait a minute. There we go. Wait. Now, excuse me. I had the buy. I'm sorry. It's a penny, but we're still long 5 deltas. It's a penny stock. Okay, basically, but you're only getting 44 cents at it, 274. If you wanted to get risky and say, well, I'm gonna throw caution to the wind, you could go 20, which means that the 27 strike could easily get hit because, I mean, not 27. What is that? The 7 strike or the 8 strike? Excuse me, I said 27. I'm looking at the cost. The You could easily hit that $8 strike if you look at this chart. Because remember, they're expecting this thing to move, well, maybe $1. We're at 5, they're expecting it to move like $1. Maybe we'll say a little over $1, maybe $2 just to be safe. This is telling me that, yeah, this thing can move $1. So, I mean, it's a cheap trade. $8 strike, which is up here. They're saying it could get to around December. The chances are there it's not very, it's a 54% chance it'll get up there. So they're saying it could, because this thing could go through the roof. Again, it's a penny stock. It would trade just like it. So if this did happen, are we getting paid for it? 50 cents off of 273? No, we're not making enough money for it. Probability of profit of only 66%, and only to get 56 cents in that? No, I want to get paid for that risk. Even though you got an 85% or 80% chance of making 50%, I want to get paid to make a penny or more. In other words, if this was like 70 and above, or this is through the roof, instead of 250 until this 272, I would like to see, like, instead of 56 cents, I would like to see 80 cents. If it's all 80 or 90 cents, like 90 cents here, well, then cool. Then you've only got in between the strikes 56 and 59, so there's not really, it's not volatile crazy. So not that comes off the table. It's definitely not something I'm looking for. Let's see, anybody else going up? Tesla again, still going up in volatility. I just don't like Tesla. I don't like, it's like Facebook. It's like a wannabe established Ford or wannabe established, NBC or something, but it's a penny stock. When I say penny, I'm talking about the volatility. Their CEOs are very unpredictable and very, ridiculous. So therefore, I don't want to be in harm's way. But let's look and see how Tesla dropped. No, it's not much. It's just a little retracement. You get it back down to where that gap is, then we're talking something. But that was all because of Trump. And that's the 274. Let's see what they're thinking about 274 getting down to that strike by January. The 274 strike, getting down there, that's like 20% chance, or actually I should say a 40% chance that might get touched into around the 274. So we're looking at a possibility there's only a 40% chance it'll get down there. So if we were to do this, 16 deltas, that would be the 265 strike. 16 deltas, there's all kinds of volume because, Tesla's volume, it's a volume whore. 16 deltas in Tesla, where are we at? Well, 17 deltas. So 1,300 bucks out of 12,000, you're not getting paid enough for it. If we were to condorize this, again, putting protection, getting our lawyers in, 130 out of 370. Okay, that's good. For a condor, hey, I'm not worried. We're basically delta neutral, except we only are getting, to make the probability of profit. I'd like to see that higher. So if we're going to 131 to a 150, I want that market to come to me. Not to say it will, but there's enough liquidity that it could. So I'd go like 139, 140. Between 130 and 150, I'd go right half the distance between there and see if that market will come to me. You got an 82% chance that this thing will expire. Again, this is a condor. So I want to get more money because it's a condor. Because if I have to adjust this to the upside, let's look at our mountain. If I had to adjust it, we're just barely off the mountain. So we're long deltas. We're definitely long deltas. No, we're significantly off that mountain. I'd like to, even is saying it's delta neutral, of course. But the thing is when I'm looking at this, if it shot up to the upside tomorrow, we would be down 71 bucks, about 71 bucks. If it shot to the downside tomorrow, we'd be down 112. So clearly you're getting paid more on the bottom, but we're a little too close on the bottom than the top, which means this thing again could shoot to the upside easily. More folks are thinking that this thing should go up than down. Why? Trump and Elon Musk. Except Trump said yesterday that Elon Musk is trying to make a home there and he's trying to kick Elon Musk out and he can't. So if we looked at January, because he's having problems kicking Elon Musk out of Mar-a-Lago, it's pissing him off, and I like that. If we looked at the January, do we have any? Look at that, the 480 strike in January. So that's 480. That's 160 bucks up, $160 up. We don't even have to. I mean, we could go to the 480 strike. There's over a thousand contracts there. So if we went $160 down, which would be 160. How many contracts on the downside down there? Do I have anything in 160? Crickets. So somebody thinks that Tesla's going to go to the upside, which means more than likely we'd be moving our lower strikes. So if we had to readjust this, we're getting 139, 361 is our buying power. Say we had to move this up a strike, 245, 755 buying power. Again, the efficiency of options, very efficient. So we went and we got so 135. So we made it, say we moved it up, got like $100. Oops, we got $100 more to move this strike up. Got $100 more to move it up, a little over 100, but it doubled our buying power. Okay, it doubled our, again, because of the fact that your strikes are a lot wider. So that's so it's like, do you really want to spend $700 to protect Tesla? No. What I want to do is I want to get ridiculous and see if that market will fill me, even though I'm going in a ridiculous situation. That means the chances are, you're taking advantage of trying to get more buying, even though you got an 88% chance of making half that money. If I did Tesla like this, I would do it at that kind of a buying power. Look at that. See, it's going like we went to 170 at once. So yeah, we're going to get crazy. Like Prince, we're going to get crazy and see, if this thing will get filled. Chances are it won't. I don't mind. So we got Tesla on there. Other than that, I was going to buy some volatility, and the only one that I like to see about buying, but it doesn't have a lot of liquidity, is SXP. Last time I did it kind of closer, or let's go to SPX, and then we'll see if there's any liquidity in XSP, which is 10 times smaller, because I don't want to be spending like $2 and $3 grand for buying volatility. If I did that, I would definitely go out a bit. But see, the thing is that means we're going to have to hold it longer, and I don't know how much theta we'll be able to get. I'm thinking about the same thing. Getting here, we're at the 6,000. Okay, we're down 9 points on the SPX. In other words, we're a little bit off that 6,000. Okay, but what I'm looking at is I would love to see where are our deltas. Okay, this thing has a chance of moving $173 one way or the other. The thing is I want something that's 50% or more chance of the market touching it to the downside. So if I did that, these are our deltas, 37 delta. So I would go closer. I might not get that 50% chance of the market touching it. So I could go down, say to like the 5,900, but that's asking a lot between now and January or in December. That's asking a lot. So if the higher I go here, the more probabilistic that this market will get down there. And so, if I went down to 75% chance of this is 80, we'll go 75 would be around 37, around here, that I could calendarize this. So I could sell the December 20 and buy like the December 27th. That gives me a week. I'd probably buy. Yeah, I want some room between these. So 20, 26. So if I were to do this, the 5930, is there any volume at the 5930 there? There should be. Let's let this populate. Okay. So 5930. Let's let this thing populate and see if some volume comes in. Because I would love to do this. You might have to go a full week, between the strikes to calendarize that. So if we did that, it would be December 20, December 26th, 27th. Let's let this populate and see if there's any strikes, any volume. And it's the SPX. It should have volume for days. Because if this has volume, then you know that the what's the name? The XSP has volume, and this SPY. And I just don't like doing spiders. 5930. There's nothing there. But if we were to do this, that calendar would cost $540. We'd be making $11, theoretically, $11 a day on theta. Volatility, $68 a day. You'd be making volatility if it should go up a point. And again, when markets go down, volatility goes up. Deltas, I could care less about because you're already, you're already long deltas. It's telling you, I guess, because of volatility. Now let's take a look at those volatilities between those two, the implieds. You have a 15 here. Let's see. Wait a minute. You've got a 14. You're selling the 14. You're buying the 14. So there's not really a major volatility crush. I don't mind that. If you were selling the 14 and buying like the 16 or buying the 17 or something like that, I'd be really fearful of this kind of trade because you're selling more. So this is basically probably why it's trying to show you your deltas are okay, even though we're long delta in terms of our price. We're at the 30 deltas, 38 deltas. But the thing is, I think the volatility is covering up. So if I did this, it would be the 540 or 594 in XSP. So if I did this, spending 10 times less, XSP, the 540 trade of the December 27th. But look, there's no granularity of strikes. So I couldn't do that. Plus, I don't even know if there's volatility on the 20 or volume on the 27th. So if I did the 594, 39 delta, there's no volume. So it doesn't matter. It's off 593. There's no volume, so it's off the table already. But if I were to do this and they had volume on it, 610, you're selling that, again, 14 volatility. The granularity of strikes is not there between these. Why do I say that? Because I want to be able to sell like I did with EEM. I want to be able to sell in between two different strikes. But if this is a 5930, it costs you 44 cents. It's telling you delta neutral. You'd be making $1.25 a day. Volatility go up, but it's not worth it. Because there's no bid ask. There's no volume. There's no volume here. If I did it with the spiders, which should have volume for days, doing the same thing, do got the granularity of strikes, 20, 27, no. I just want to see 594. If I wanted to go directional, I would sell the 20 by the 27. December 27, 594. 57 cents. Still kind of, basically no deltas. Because, it's basically delta neutral. You're just off the 5.9, basically. And you're getting paid $1.17 a day volatility. So, this is another cheap trade that more than likely will not materialize. Again, it's, let's go down even more in deltas because the 594 might be pushing it. If we went down to the 590, yeah, so it'd be 590 on these. So we go to 590 there, and we take the December 20th, move that down to 590. Okay. Yeah. Okay. Good. It's a little better in terms of our deltas. So if we went down to 590s, we're at 39 deltas. We could even move that even further. We can move it down. Oh, no, we're there, 590. So if we did this, we'd still be getting, we have more room for market to help us out. We'd still be getting paid the same deltas. We're a little bit more, the same theta per day. We still got the same Vega risk. Deltas are, we're a little bit more long deltas, so that market has to come get us to get in our tent, but I don't care about that. He's already off the mountain. I want him to come climb that mountain that he's off, because he's thoroughly off the mountain. I would like him to come climb it, but if they don't climb that mountain to come get us down there, it's not like I'm gonna cry. You know, it would be nice, but I'm not gonna cry. We could really move this thing even more to see if we could get a cheaper price. To see if we could get a cheaper price for this. I wouldn't mind that. Let me see. Let me get my mountain up there. Okay, it's not gonna do it. I wouldn't mind that. If it came down there, cool. If it didn't, cool. VIX is barely up today. VIX, I think, yeah, it's less than 0.5%. So VIX is just barely it's basically flat. So I'm not gonna freak on that. And yeah, I'm not gonna freak on the VIX. But but if I did this with spiders, maybe a double diagonal, it costs a little bit more, but a double diagonal on the spiders would be the way to go. That gives you some granularity between strikes. When I say granularity, it gives you more strikes that you can move and keep moving and moving should something bad happen. And so if I did that, I would definitely be doing December. There should be some kind of volume on some of these months. I'm seeing nothing. So wait for it to populate. I'm looking to see the at the money volume. It's got some, but it's not like ridiculous amounts of volume. But yeah, because I normally don't like. Yeah, if I did this, I want to spend some time. I want some time to come in. And 36 days is a long, long time on a diagonal. When's Thanksgiving? What is that? Like the 25th, something like that, 22nd. See, looking at this volatility. See if we went to the 20th, 21st, and say we did like a double diag. Again, I want to go around giving it at least a 60% chance of touching. So if I did 36 deltas here, which is, let's see, from where we're at now, 1, 2, 3, 4, 5 strikes out. 1, 2, 3, 4, 5 strikes out. That's 33 deltas. 4 strikes is 36. So somebody's seeing a little bit of risk up there. So if we were to do this, and that's the 596. Let's go 596. Yeah, so that way. Well, look at all those. There's a lot of volume there. So I don't mind that. So the 591 600, 591 600. Yeah, 591 600. Let's go to, because I believe that this could get more volatile. And let's go to from November 21st. Let's go and let's see. There's no volatility there. November 21st is selling 13. If we're buying 13 on December 6th, what would happen if we're buying 591? We'll let this thing populate. 591 600, which is your 6,000 strike, that they're more than likely thinking this thing will go back to the 6,000. What if we did that double diag or double calendar? Or if we know that it could get there, let's see, we'd be paying for that, only getting $19 a day. What we could do is the ones we're selling, we'll take that strike, move it out to 590, and then take the 600 strike and move that up. And so we've got that double diagonal. We're paying $600 for this, even though they're saying you get a 90% chance of getting 50%. I'm not going to take that for face value because this is calendarized. You're getting $17 a day, $590 of buying power. So each diagonal is $1 wide diagonals. $1 wide diagonals. What are we getting paid? Because you want to get at least 60% of that diagonal. You want to pay no more than 60% of that diagonal. So if we were to do this, and let's see, let's go to the trade. If we were to do this, we are buying the 417 put, and we're buying 417 and we're selling 175. 417 minus 175. What is that? 417 minus 175. 417 minus 175 is, oops, let's clear that again. 417 minus 175 equals, I'm coming up with all kinds of strange answers. Let me reset. 4, oh, I know why, because I'm not typing the 4. Minus 175. There we go. So 242 is what percentage? And that's, what is the strike? 590, is this $1 strikes? So that's $1. What is that? The put is 590, 591. That's $1 strike. And we only want to be paying 60% of that $1 strike. Nope. This one's off the table. I'm gonna do some research on this because I really want to just do a regular calendar, just a simple calendar that's out of the money. But I'm not seeing the pricing I want. SXP does not have the volume. So we'll see what happens. KW, good to see you, KW. Yeah, KW, on that other channel, I had to put that crazy video up there because, the thing is I'm looking at this cacophony of craziness that's going on with political environment right now, and I could only see volatility come in because it's going to only get crazier. And if that volatility comes in, I want to get paid for it. I really, really want to get paid for the crazy. And so I had to put that other video up. I hope it pisses a lot of folks off, but it is what it is. Anyways, so what did we do today? Okay, we're sitting on ARK, Delta Airlines. We're waiting to see if we can get filled on that. Of course, we're not going to get the credit. I may come down a little bit on this because markets have settled down a little bit, but I want Delta. I want to get this one. I do want that trade. So Delta's up. Nope. Because Delta's up, I'm going to go for where the market doesn't want to get me filled. Remember, this thing was moving everywhere. And we'll just get a ridiculous price on Delta Airlines. EEM, we moved. We're doing okay on that. GDX, we just got filled on that. KRE is that condor that I'm really like, it is what it is. SCMI, we Delta neutral that. Tilray was the lotto ticket trade. TLT is a free trade. Tesla, we're going to go in just with a condor. Again, it's not like the best of trades, but it is what it is. VIX, we're holding on to that till December. I could care less. X is still kind of Delta neutral. We're getting hurt on volatility, but that's it. And XSP is a dead trade. So we got a few trades we're putting on today, and we'll just see what happens there. But anyways, just to give you kind of ideas. And you know what? I'm going to give you a little bonus here, Brother Will. in KW. Because I'm not, when I do directional, and I've got to do this very skillfully because I cannot put too much out there in terms of what I'm working on, what I've been working on for the last decade and change. But I love it. I love it. I love it. I love it. I'm on this thing, like I said, it's a daily thing for me. It's like, it is the Holy Grail. And I got to call my sister today because, man, I went over there, over at the Brill Institute yesterday. I went up there because they got these free food giveaway and they give you a lot of produce. And since I love cooking, I'm going to grab what I can. And I got to hand it to them. They are so cool. They give you whatever you want. I mean, they had so much produce that, I mean, it wasn't like when I go to the farmer's market. But hey, I'm not going to say no. I'm not going to say no. The spinach that they had was kind of wilted. So, that was kind of like, eh. And I had it sitting. I didn't know that they had spinach that was sitting in a bag that I had sat on the seat of the train. So I'm like, damn, I don't want that stuff because, I don't want anything, contaminated. But it was cool. I'm not mad at him. But I went up there. And as I'm going up there, I was getting on the train, and there was this brother, young. He looked like he was mixed, probably like from Venezuela or Puerto Rico or something. I could tell he definitely didn't have the same, vibe, for lack of a better term, as somebody that I'm used to seeing every day. And he just stood like right behind me, like 1 foot behind me, and you got an entire platform that's like empty, basically. And I'm like, this don't look right. What dude is just standing there, and I'm like, because I got my cane and I got my, I don't have a dog yet because I'm trying not to get a dog, and plus I got my enforcement trainer shirt because even though I can't see, enforcement trainers is where I go to shoot. Because when I go to shoot, okay, and they got a lot of guns down there, and you could, and you don't have to take your own gun. They got guns you could basically use because that's where all the sheriffs, all the law enforcement, and all that shoot. I go to where they train, and I go train where they're at. And a lot of people are like, what? Yes, be the spook that sat by the door, and that's what I do. Wherever they go to train, I go to train, and they've got more ammunition and more weapons that you could actually mess with. And so I mean, they've got so many weapons that you can mess with to train with. And so the thing is, I got my trainer shirt on because it's like where all law departments, military goes to train down there, and that's where I like to go shoot. And I can't really see much, but I'm still gonna. Hey, if all I could see is a little bit, I'll let the bullet go ahead and figure it out. I'll use the force, and it could go ahead and use whatever it wants. But and I still can see a little bit, not much. I mean, I'm dangerous with a gun. I'll tell you that much. I am dangerous because I can't see shit. But it is what it is. But I'm thinking to myself, this dude is standing right behind me. I got my trainer shirt on, and he was a brother, so I can't really get mad. But I was like, this don't look good. This is not good. So what had happened is I was telling myself, I said, you know what I'm gonna do is I'm just gonna go and move to where there's a wall behind me because this is a little too strange. Like that song by Cameo, she's strange. And I just said, let me just let him do what he's got to do because I don't want this to turn out to be an international incident. Should he lose his mind and want to do something crazy, let me just move to the side, let him do what he's got to do. But that kind of reason I'm saying it is it kind of prompts me that I have to escalate my live streams with my sister because she's the only one that has the grill other than me. So if something ever happened and I get pushed in front of a train, she could actually continue it. And I was like, because I'm sitting here, I mean, there's a lot of crazies out there. I'm telling y'all, there's a lot of crazies because of the way, Biden ran his economy, of course. And, you got they emptied out all the mental institutions, I mean, it's nuts. I mean, I see it daily. But anyways, I wanted to show you this, give you a bonus. And the reason I'm telling you this is to give you a bonus. Whenever I develop a trading strategy or a system that has to do with directional, even if it's non-directional, but there's a possibility of a market getting somewhere. The key to doing this is you want to know where this thing is going to go and when. Like it's going down right now. This is wheat. We're looking at the wheat chart. Okay. And I was going to do some futures trades for you, but I want to do these options first, and then we'll get into futures later and do futures options and calendar spreads of futures and, other type of spreads, which again is about getting income. I don't care about direction. All I care about is getting income. Hold on for 1 sec. If I could get some sort of money coming in every week, even if it's a little bit, you're getting money coming in. I don't care whether a market goes up, down, or sideways. But markets, that's what they do. They go up, down, and sideways. So why not only be prepared for it, but why not capitalize on it? So nobody knows how far this thing's going to go down. So what I do is I like to develop strategies that'll tell me not only where could a market go, but when. And what I do is I don't look at this and saying, okay, like a lot of people use moving averages and they use a lot of things. All I care about is getting whatever swing I can from one step to the next. So I'll use this step. A lot of folks will say Fibonacci, they use this, they use that. I'll say, what can I construct geometrically? What can I construct that'll say, if this is the bottom of a swing and this is the top of that swing, if this market was way over here and you saw it look like this, you were at the right side of the screen, you would never know where that market's going to go next. So my thing is, if this is the bottom and you don't know this is the top yet, how do I determine that top? Well, I look back in time to say, what kind of geometric thing could give me some outlook? And that's why I use like geometry. It'll show me, okay, now this is the highest probability that's the top. So if I want to sell this trade, how far can it go around before it goes back up? So I have to devise a strategy. The strategy that helped me pick this top, which I have, I also have to use the same methods that will allow me to how far this thing could go down before it goes back up. Because a lot of folks will say, oh, it's going to hit the floor. So they'll go in, they'll say, okay, yep, it's going down. I'm going to get in the trade. They're like, yep, it's going down. Well, nobody knows if this thing's going to turn around or not. Nobody knows. Anything can happen. But what I did is develop a strategy that says, yeah, and it's not just a strategy, it's just a consistent method of just using the swings themselves and the measurement of swings themselves to say, when it looks like this, chances are it's going to look like this. When it looks like this, the next chances it's going to look like a certain thing. So each of these different swings are going to show you how the next swing is going to. So nobody knows. If you look at the right side of the chart, of course, this thing went up after this. And it continued. So the thing is I develop a strategy that's consistent. It has to be consistent. Not looking at moving averages saying, well, it went down to here. Why? Because if I'm in this trade where we were at before and I got into this trade, all I care about is the juice worth the squeeze. How much am I willing to risk in order to get something? That something has to pay for that juice. I mean, that squeeze. If you're squeezing a lot and only getting a little bit of juice, it ain't worth the squeeze. So if you don't know this thing's going down, my thing is, how much am I willing to risk going down? If I know how far, if in advance this thing could go down. Some folks who use support and resistance, some folks who use Fibonacci, some folks who use medians, some folks who use whatever, what's the name? What's the name? Channels. What are that? Not standard deviation, but what's the other one? You got standard deviation channels, and then you got the other one. Oh man, it's gonna drive me nuts. Now I gotta remember. We're gonna get it here in a minute. I'm gonna tell you what it is. Regression channels. That's it. Some folks use regression. Some folks use standard deviation. I don't care what it is. My thing is if I get in, can I get more juice? And that's why I like options. Why I've been showing you this, Brother Will, because what I'm doing is telling you about risk. It's not about being right. It's not about looking at a chart and trying to say, oh, the market's got to go here. I don't care. Market could go wherever it is. All I care about is what am I risking to make the juice? So whatever it does, as long as I'm not risking too much to I get more juice worth how much I'm risking, then that's why I move those strikes around, because I'm like, man, I got to move these around because I'm, the juice. I got to get that juice. I got to get that juice and move these strikes around so I can get more juice, and not have to squeeze too much, because I've been getting hurt. There's no doubt about it. You saw SMCI for a minute. You saw X. I mean, those are telling me, hey, you're going to have to get some more juice out of this. Well, when you're looking directional, whether it's futures, which is what we're looking at now, we're looking at wheat. We could look at corn. We could look at soybeans, and we could look at cattle or pigs. It doesn't matter, or lumber. It doesn't matter what you look at. Or we could look at Apple or Microsoft or Bitcoin. It doesn't matter what you look at. The thing is, whatever you do, even if you're just looking at a chart, and that's all you're using. If you wanted, being that this thing wheat has fallen and fallen, and you wanted to get into this trade right now, where this price is at, what are you willing to risk? Well, what is the squeeze? Okay, is what you're willing to risk, but you don't know how far. First off, no one knows if this is the bottom of wheat. But say you already determined that this is the bottom of wheat. Why? Well, it's the bottom of wheat because XYZ. Well, that same XYZ should give you the same XYZ why wheat should turn around and hit the next target. The same XYZ that made you know that this is going to be the bottom should be the same XYZ that knows where you're going to get out. And that's what I look at as the juice worth the squeeze. And my methods are the same way every time, each way in terms of my geometry. It never changes. It's the same thing every single time. So that way I use the geometry to get in. Then I say, okay, the same geometry that I used to get in should give me my target. So now if I know what my target is, now I know how much I'm risking to get there. And so therefore I don't care if it's bullish, bearish. Folks will say, well, it's got to move. That's why I don't do moving averages. And I don't have a chart that has 9,000 indicators on it. I can't do that. A chart that has like 10,000 indicators to me is ridiculous, because you have to use the same methods getting in that you got out with, because markets are efficient, 100% efficient. And because of that, I want to use that efficiency to determine how I'm going to trade it or whatnot. But anyways, just wanted to give you that little heads up, just in terms. But anyways, we know what's going on. We got some trades on. Everything is everyone. Anyways, Hotep, y'all take care.